The brutal truth is, you are going to lose money day trading. It's a fact. In this video, I'll explain the reasons behind this fact and provide you with strategies to minimize losses and potentially achieve success as a trader. And no, I'm not here to sell you anything, and I'm not going to tell you to buy some dodgy course either, and there won't be any affiliated links in this video. What I will do, however, is delve into the reasons behind the failure of many day traders, and later explore what actually does work. I'll draw from my personal experience of successful trading over the years and share insights that you can also benefit from, so keep watching. And if you're new here, a warm welcome to you. My channel focuses on genuine and practical approaches to earning money. Feel free to subscribe and engage in the comment section to share your thoughts on this video. You see, the problem with day trading is that day traders, more often than not, trade on technical analysis alone, and without having any understanding in the financial markets. From my perspective, there are numerous challenges associated with relying exclusively on technical analysis alone. Now, before we dive deeper into the technical aspects, let's consider some statistics. Various studies have investigated the success rates of day traders, while a few suggest success rates between a lousy 80 to 99%, the majority of these studies indicate that approximately 95% of day traders lose money, with only around 5% achieving success. Now, let me show you something, okay? I'm going to try and bring up this chart over here and show you the problem with day trading. I hope it fits in the screen. Over here we have the FTSE, and this is a day trader's chart of either a minute chart or a 5-minute chart. These numbers are just made up, don't worry about it. So we got between 6,900 and 7,300. The day traders in this kind of chart would probably trade in a range of only about 20 points. But again, the numbers are irrelevant. What I want to show you is as follows. A typical day trader will see it comes over here, comes down to 6,900, they'll buy a £1,000 trade. It will start going up and it will go up to the resistance, and they will sell it maybe just before it gets up there at 7,300. They made a good few $1,000 or pounds or whatever it is they're trading. It then continues going back down. Some stupid traders will trade also on the way down. But let's say this is a trader that's only trading, is only buying, only doing puts, and not he's only buying long, right, and not short. Right, it comes down again to 6,900. Again, he buys in. Let's say this time he's so happy with he's got it all. He gets the whole market. It's definitely going back up, and he buys in at another, I don't know, $10,000. It goes up to 7,300, and he sells. And it goes back down and he buys in again. But this time he's got all his money on this trade. Now the problem is, what he didn't look is, first of all, he didn't look at the economical calendar to see what's going on. But he hasn't looked into the fundamentals of why this stock right now is what they call trading flat. It's going sideways, it's not going anywhere. And any news is going to make a big movement. So he's gone long over here again. But what happened here is, it's, I don't know, 1:30 in the afternoon UK time, or 7 o'clock in the morning. Inflation data just came out and it completely disappointed. Inflation is higher than expected and the market crashes. And he's lost all his money. Now that, my friends, is the problem with technical analysis alone, when you don't consider the fundamentals and what actually is moving the markets. So in my opinion, and the most important way to trade is trading based on fundamentals. If it's a stock, you got to understand the company, analyzing the financial statements, their earnings, the health of the company, or with an index to consider the overall state of the economy, interest rates, employment, GDP, the housing market, etc. And if there was a big movement in a specific stock or index, it's imperative to dissect and understand the underlying reasons before considering a return to the market using technical analysis. In this short reel, which I shared on my Instagram account a few months back, I explained this in very simple terms. Have a listen. When it comes to technical analysis and trading, you see, a lightning doesn't strike twice in exactly the same spot. Yes, the storm will linger around for a little bit, but eventually the storm will move on to another location. And the same thing is with trading. You'll find a storm in a certain stock or commodity that you're trading at the time. Let's take gold, for example. And you find the support at around 1950, your resistance at around 2000, and you buy in at 1950, it goes up to 2000, you've made a profit, you close your position, and it goes back down to 1950, and if you're stupid enough, you'll buy in again, it goes up to 2000, and you sell it. But eventually, the storm will move to another location, and usually the opposite direction of where you want it to be. But when this happens, you have to take your profits and stop and wait till the storm has settled in another location. find your support and your resistance there, and trade again, and take your profits. Follow for more. And watch this follow-up reel, which explains in short everything we just spoke about. One of the biggest myths in trading is that people think they're going to make a lot of money very quickly, and they're going to be able to drive Lamborghinis, Porsches, Ferraris, etc. Well, if you haven't yet discovered this, let me be the first to tell you that that's a lot of shit, it's a lot of crap. Trading is a slow and patient grind. You have to understand what's going on in the markets. But the most important thing is you got to understand what actually moves the market. When a stock jumps or drops, when an index jumps or drops, what were the fundamentals behind it? And when you understand that, can you maybe start to earn a little bit of money? So, if you think you, the 18-year-old just out of high school who has no experience in the real world, or you, the unemployed couch potato, who saw an ad on the social media feed of a guy driving a Lamborghini telling you that you can get rich quick with day trading. Or you might be the stay-at-home mum whose partner works like a dog, hardly makes enough for your weekly shop, and whose best friend's boyfriend is a top fund manager and thinks you can do it too by just buying some dodgy trading courses online. Or you, the person that has some spare money, savings maybe, and also thinks this is a quick way to get rich quickly. You think you will be that person, that 5% to make $1 million while sitting in your pajamas at home just by pressing a few buttons on your phone with your fingers? Get real, mate. It ain't gonna bloody happen. And anybody that tells you to buy a course to learn how to day trade, stay away. You'll be wasting the money you spent on the course, and worse, the money you put in a funded trading account. I find it funny when I see ads pop up in my social feed of these 20-year-old kids. Yeah, I call them kids because in trading, they're like little kids. Ain't got a bloody clue. Sitting in a Ferrari or on a yacht saying that if you buy their course on how to day trade, you can turn $200 into $200,000. What these kids are doing is just making money off the crappy courses they sell you. Piece of advice when it comes to buying a course. Never buy a course from somebody that hasn't traded for a minimum of 5 years or hasn't lived through a market crash, a pandemic, inflation, and recession. These people have no idea how the market reacts to such events. Now, swing trading, though, is a complete different kettle of fish. Like most of you watching this video, I too tried day trading years ago, in my early days of trading. And after blowing a couple of accounts, I discovered very quickly that day trading doesn't work. So I put into practice everything I mentioned above and started swing trading instead. Now, swing trading is completely different than day trading, especially when you trade on fundamentals, and then when the technical and fundamentals add up together, when I understand the product that I'm trading, only then will I open a trade. Swing trading is when you hold a trade for a period of time. It could be weeks, sometimes months, and if you're lucky, it could be days or even a few hours. If I believe in a trade and keep it to a small amount, then there's no need to use tight stop losses. More often than not, I'm quite happy to wait a while until the trade plays out. I'm not constantly looking at the charts. I don't even look at my ongoing profit and loss figure, as it just plays into my emotions. I don't trade large amounts because I know this is not a get-rich-quick scheme. This is real money and the real world of financial trading. If something big happens in the world or to the company of the stock I'm trading and it goes south, I'll manually close my trade and have no problem sometimes losing money. And every month I make profits consistently. And you will know this if you follow me on Instagram, where I post profits and progress on my 50K account that I started back in February and March this year. I'm not making this up, you can go have a look. So to sum up, day traders lose money. Try swing trading instead, and only trade if you understand the markets. Don't get greedy, and just because you made money in movements once does not mean you will make money in the same price movement again. Prior success doesn't guarantee future results. Be patient, and most important of all, hope for the best but expect the worst. This way you will never be disappointed, and always remember, God rules the world. Thank you for watching.